Hello everyone. I hope you're all doing well with the midterms. My name is Justin Nguyen, and I'm a student analyst at the AIM program covering international consumer discretionary. Today, I'm going to be pitching JD.com, ticker JD. All right, to begin with, I would like to talk a little bit about my screen process. So I was looking for a company that has sustainable growth, but also there are room for them to expand on the margin. So JD stood out because the company is a very capital intensive business, and they actually became profitable in 2019, and they are doing very well. They did very well in 2020 and expected to do the same in 2021. So they are basically reaping benefits from the investment. And they engage in both the direct sales and online marketplace approach. So they have two business segments, JD Retail and New Business. And New Business includes JD Logistics, JD Health, JD Digits, JD Property, which basically represents their logistic teams, the health business, the fintech arm, the asset management business. And we're going to talk a lot about these, even though they only contribute about 4% of total revenue. So this is my recommendation. First, JD's direct sales approach, which requires a very capital-intensive business model, allows the company to tighten their control over product quality, and thus lead to margin expansion, as fulfillment costs will decrease over time as the company reaches out to most areas in the country. And by that, they would have a lot of potential in the expansion in lower tiers areas. Last but not least, the spin-off of JD Health, JD Logistics, and more subsidiaries on the block will create a huge incremental value for the new business segment. Note that this segment only contributes about 4% of the company in total revenue, and JD's market cap is only at $135 billion. But each spin-off, for example, JD Health is valued at $29 billion, and JD Logistics is expected to be valued at $40 billion. Thus, $135 billion market cap for JD is a huge understatement for the company's true value. Therefore, it is recommended that JD.com be added to the AIM International Fund at the target price of $114.90, representing 36.75% upside. So onto my drivers. First, JD can capitalize on the e-commerce growth momentum that was set forth by the pandemic. Last year, it was reported that China's total e-commerce retail sales placed up to over 50% in the country's total retail sales. And the business-to-consumer market is expected to rise at about 31% CAGR through 2024. So, 88% of JD's total revenue comes from direct sales channel. So it is expected that this driver would contribute an increase in the upper teens in sales for JD. Second, JD has a lot of potential in the lower tiers area expansion. Morgan Stanley reports that in 2016, the China consumption market is $4.4 trillion, and that figure is expected to rise up to $9.7 trillion in 2030. And two-thirds of that increase would be attributed to the Tier 3 and Tier 4 consumers. Therefore, in response to such a business opportunity, JD has formed the Jingxi business, which is an e-commerce platform specifically devoted to the consumers from these areas. And this driver is expected to add about 2% in sales increase in the next 3 or 4 years. Last but not least, JD can expect margin expansion as they reach their maturity stage. After spending a lot of investment on infrastructure, CapEx, and advertising, the company is expected to reap benefits from the initial investments because fulfillment costs decrease as the company has reached out to most areas in the countries. Additionally, when subsidiaries of JDs like JD Health, JD Logistics, JD Property, and JD Digits and more has been IPO, the company can take a lot of burden on cost and management off of them, and thus operating margin is expected to rise at about 11.7% CAGR. So here is my valuation of JD. So I use three methods: the DCF, 10-year, PE multiple, and EV to gross merchandise volume multiple. So the first two are very familiar, and I derive at the intrinsic values of $108.59 and a relative value of $123.62. But for the last one, what is gross merchandise volume? So gross merchandise volume is the total value of transactions that take place on the e-commerce platform. For example, if I sell you a pen, let's say on eBay, and the pen is worth $10 and someone buys it, so eBay would take into account that $10 at their gross merchandise volume. And it is different from revenue because their sales is not $10. They may collect a fee worth 10% of it. So they may collect $1 as revenue, but this is gross merchandise volume. So this is different. And why do I use this? Because take in mind that these e-commerce companies are very new. They're very early stage and they're a growth company. So a huge part of their valuations is that how can they capture growth? How can they capture the market share? And gross merchandise volume represents that very straightforward. So I used a multiple of 0.65 and derived a relative value of $156.73. I weight these 80, 10, and 10, and finally derive the value of $114.90. So here comes our risk. First, antitrust and consumer lending regulations is the risk that I'd like to concentrate on. Partly because this is very unpredictable coming from the Chinese government, and it may potentially change the way that JDs do business on its online platform, even though I don't believe it would be that substantial. But the consumer lending regulations really has some influence on the fintech arm as they withdraw their IPO application for JD Digits. The second and third risk, the pressure on margin and competition. So basically, the company is expected to keep its spending rates on CapEx and advertising and technology. So it would create a little pressure on the operating margin for the next year or two. And lastly, they face a lot of competition from Alibaba and Pinduoduo, who spend a lot on discounts and promotions to try to capture market share. And here are the three key figures that run the company. From the far right is Richard Liu, the company CEO and founder and chairman of the board. And in the middle is Lei Shu, the company CEO of JD Retail. And lastly is Sandy Ranshu, the company CFO. So to conclude, I would like to reiterate that JD is a very sustainable business whose business market segment is being overlooked by the market. And thus, it is recommended that JD is added to the AIM International Fund at the target price of $114.90.